The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 1 March 2019. Well, 2 months have gone by in 2019 already. General market outlook. The major stock indexes continue to test the overhead resistance going toward their November highs, and it looks overextended. It wouldn't be surprising to me to see these indexes come back down and test the 200-day moving averages. The S&P 600 small cap index and the Dow Transports are seeing some resistance at the 200-day lines. So we will see. Gold and silver had a really bad day today. Both were off substantially. Gold was off $20 for the day, ending below the 1,300 level, which is sort of crucial on a psychological basis. And silver is off 38 cents, back down into the low 15s. Platinum followed suit, off percentage-wise a little bit less than gold, 1.4%, let's say. And palladium was hanging in there, actually gained $3 on the day. Palladium, of course, has been the star in the four precious metals for the last, more than a year, actually. It's been doing it for many months in a row. Kind of moving to its own dynamic. We'll see if this is about the top or not. Time will tell. Coming back to the stock market theme on a global basis, global stocks fall on China weakness, tempered trade hopes. This is from Reuters. Global equity markets fell Thursday. This was an article out on Thursday this week, as weak Chinese economic data and mixed messages of the progress of trade talks between China and the United States weighed on investor sentiment. Earlier news of the collapse of the summit between U.S. President Donald Trump and North Korea leader Kim Jong-un on denuclearization triggered flight to quality bids in lower risk assets such as the Swiss franc. So global stock markets are falling off as well. Really, as I've said and say almost every week, the numbers alone really don't tell the whole picture, and anyone that listens to these type of updates is well aware of that fact. What we aren't aware of, or let me restate that, what we should be more aware to watch for is when there is a rollover in these markets. And I want to add something here. I look at a lot of things, and I do go to USA Watchdog, Greg Hunter's channel, fairly often. I did an interview with Martin Armstrong recently, and I have to hand some accolades to Martin Armstrong in some ways. First of all, we're probably on the same page as far as the debt markets, the bond markets. These can't be paid off. People move to gold as sort of a government failure type of situation. Of course, I consider it that as well as flight to safety. But what he said was that there'll be a flight into equities. Those are my words, but he was indicating a strong move into the equity market that could go much higher due to the bond failure. In other words, when the debt can't be paid off, and it cannot, and the market recognizes that, then where is that bond money going to move to? I've always contended that some of it will be a run to gold. In fact, I still maintain that position, that a lot of it, or a fairly good percentage of it, will make a run to gold, and that will spill over in the silver market. And history's shown that in the past, and I believe that will hold true. In fact, I think it'll be a dynamic that's going to be one for the financial record books, but time will tell if I'm correct or not. But what Mr. Armstrong indicated was that that money will be seeking another avenue. And with that kind of money potentially going into a market or markets, the equity markets is certainly an alternative. So it was an interesting back and forth between Greg and Martin Armstrong, and I really can't rule that out. I mean, I'm pretty negative on the stock market and have been. It's overextended in so many ways by so many measures, but that does not mean it can't go higher, and especially if Mr. Armstrong's contention that the market would seek the safety of not bonds, in other words, of the equity market. So something to bear in mind, watch closely. Markets know more than anybody, and we will see. I think that it's possible we could see a rollover in the bond market and a rollover in the stock market at the same time, but again, time will tell. And a quick one from Mish Talk, Mish Shedlock. Mish does some great work. Only met him once. Interesting guy. Pretty smart as well. Anyway, this is obvious here. This is a recession signaling getting louder. 5-year yields inverts with 3-month yields. I won't read them all to you, but you can see, and what he points out is the yield curve is inverted in 11 different spots. The latest is the 5-year to 3-month inversion. The yield curve recession signal is louder and louder. Inversions are persistent and growing. So I think that's about all we need to know. We've been aware of this, but I think this is a good article, and accolades to Mish Shedlock. You might consider this article a bit of icing on the cake. Max Lavo from When the Stuff Hits the Fan. I don't feature him that often, but this is a pretty interesting article. Global markets are now facing a $12 trillion reckoning. The problem staring financial apocalypse right now in the face is the potential to accelerate the coming stock market crash, which goes along with what I just said a moment ago. A recent report from the Congressional Budget Office has warned that deficits will total $11.6 trillion or 4.4% of domestic gross product between 2020 and 2029, which is far higher than the historical average of about 3% over the last 50 years. The reckoning will come when no one wants to buy that debt, and that time is quickly approaching. And that's the sentence I wanted to point out. Agreed. And, of course, this is already taking place. China doesn't really want our debt. Russia doesn't want our debt. A lot of countries are buying a lot less or ceased buying, or for all practical purposes ceased buying it. And, of course, that leaves the buyer of last resort to be the Federal Reserve itself. And, of course, that is what's taking place. And this makes it difficult for the Fed to clean up their balance sheet and sell off some of the toxic waste that they bought during the 2008 financial crisis, to put that out into the marketplace and have anyone with any sense at all want to buy it from them. Although they have been trying to off some of this and to clean up their balance sheets, basically come to a halt. At least that's what they've indicated in their last FOMC minutes, and the way they're talking pretty dovishly now. So we are facing a time, and it's getting closer, and I know that myself and others like me have been saying this for a long time, but remember the 2008 crisis was just that. It has not been fixed, and the whole situation has continued to build negative energy, I would call it, into the financial system at large. So at the next time, it's not necessarily going to be able to be rescued like it was during the 2008 situation. And many of you, some are new, of course, are used to me saying that, the numbers in the stock markets do not, in almost any market, bond market, stock market, metals market, you name it, currency markets, really reflect what's really going on in the physical economy. And here's an example of that from Zero Hedge, which I feature almost every week. At a time when global auto sales are grinding to what feels like an inevitable prolonged recession, the world is taking many of its industry cues from China. And basically what this is talking about is that Ford Motor Company is basically taking back a lot of their work and their presence in China. And this is not that surprising. We are seeing a contraction. As I've said, it is a stagflation situation, which means a less robust physical economy and higher prices across the board. Get prepared. Another cue coming from the physical economy, Heineken USA is cutting 15% of the workforce. I mean, a beer company starts cutting back. You've got to consider what's really going on. I say it with a bit of humor because during hard times, entertainment and booze, any escape mechanism, be it alcohol or whatever, seems to do fairly well or better during hard times. And of course, this is just Heineken. It's only one beer company, but I find it interesting. I thought I'd point it out. And one last one, Boots is laying off many jobs. It's the largest employer in Nottingham. You can look it up if you're not familiar with what this company is, but it's a pretty good-sized company. And one more thing to point out, that the physical economy is reflecting a different story than what we're hearing in the mainstream financial press. This is an interesting article about cryptocurrencies. This is cases of money laundering linked to cryptocurrency in Japan up tenfold in 2018. I won't read the whole thing. 7,000 cases of suspected money laundering linked to cryptocurrencies were reported to the police in 2018. The figure jumped more than tenfold from the 669 cases reported in a shorter period between April and December 2017, when it became mandatory for cryptocurrency exchange operators to report transactions suspected to be linked to the movement of illegally obtained cash. So there's a pro and con to this whole cryptocurrency situation, and it's continuing to move. in both directions, really. You see a lot of positive news, a lot more acceptance, a lot easier, new wallets. I mean, a lot of stuff is in the news if you follow the sector. We have been reporting on it on a monthly basis in the Morgan Report now for well over a year, but there's still a lot of unknowns about the whole space. And just a reminder that the March issue of the Morgan Report will be issued this weekend, probably Saturday, the 2nd of March. This is last month's issue, February's issue, just showing you kind of what it looks like here. Talked about silver as money. I got into a debate with a gentleman from Small Gold, Lewis, and I can't pronounce his last name. I don't want to butcher it, but it's an interesting discussion, really. It was pretty friendly back and forth, but I point out during that discussion my reasoning on silver being money legally. There's no question about that, believe it or not, but economically, and so that's really the bottom line, and talked about that. Then last month's report, again, this is February's report. The new one is not up on the site yet. We talked about M&A activity and showed a lot of possible takeover candidates, and we were pretty accurate last time we did this. In fact, 3 of them actually came to fruition on what we had projected as far as what the possibilities were for takeover candidates. And so that's it. I'll be back with you next week with another weekly perspective. Hello, I'm David Morgan, publisher of the Morgan Report, and as some of you may already know, the Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter: to-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets, and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You will understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.